The market is frozen in a lot of ways. And what I mean by frozen is that houses that would traditionally be for sale are not for sale. So today we're going to be talking about that. And look, if you're thinking about retiring, this video is important. And if you're looking at buying and you're wondering why boomers are not selling, this video is going to explain it. So if you're new to the channel, I'm a lender. I'm licensed in 48 states. My team's in 50. We can help you everywhere. We're one of the top purchase teams in America. We tell you the real deal, right? I'm never going to push you to do anything. 786-933-2077. Okay, so what's going on? Let's talk about the normal life cycle of real estate. You got to know this to understand why we're in murky water right now. So generally you've got your first time home buyers, you've got your first house, then you become a move up buyer, you're getting that bigger house. If you have a family, that's where you raise your house. You know, it's where you live when you're working, it's your most expensive house. Then when you retire, you downsize. You downsize because you're trying to get to a lower cost, and you downsize because you're trying to get to lower maintenance. That has been the cycle of life with real estate forever. Well, until recently. And, you know, people talk about the low rates of 2020, 21, and 22, and they're like, oh, if we could get that back. Guys, it ruined the housing market for decades to come. And ruin's a dramatic phrase, but when I start explaining this to you, you're gonna be like, oh, wow, it did have some real impact. Now look, are there still markets around the country where first-time home buyers and move-up buyers can do well? Yes, but are there other markets that are, you know, heavily dependent on people downsizing where people are not downsizing that are really having trouble? Yes, okay? So why are the boomers not downsizing? Sometimes you'll see articles where it says, well, they're greedy. They want us to have nothing. They want to live in palatial mansions by themselves and we suffer. No, it's a math problem. It's a simple math problem. So look, for instance, back in the day, it would be, let's say you lived in New Jersey, you bought the house, you pay it off. When you retire, you sell it, you're moving to Florida. Hurrah, right? There were basic migration patterns of where people would go to. And let's use California, for example. So in California, if you bought a house in the 80s, it would be like $12. Now it's $3 million, okay? Let's say you don't have a mortgage on it. You're like, well, why don't they downsize? Well, so California has it where your property taxes are based off of what you bought the house at, and then it only can go up a little bit every single year. So even though the property is worth $3 million, the owner's not paying property taxes like it's $3 million. They're basically living in a house that's worth $3 million. They have no mortgage and their property taxes are really low. It's one of the good things California has done because it helps retirees stay in their house. If they normally would have gone to Florida, that's now less desirable because even if they go to Florida, you know, oh, I'm selling my house for $3 million. I'm going to buy a house in cash in Florida for $1 million, right? You're like, well, they'd have to be saving money. No, they're not going to save money. Their cost is going to go up because in Florida, in most counties, it's going to be based off the purchase price. You'll get some discount if you're a senior, but it's not a big enough discount to offset the math. And that's what retirees are looking at. What is my monthly cost going to be? You know, back in the day, prior to COVID, there were so many parts of the country where seniors could move from high cost areas and they could have a lower cost of living. But when we saw prices jump up and so many of these areas don't have caps on property taxes, you saw those areas become unaffordable, okay? That's reason number one, property taxes. Okay. And look, if you're watching this and you're a retiree and you're like, oh my gosh, I didn't even think about that. Guys, think about it. You want to look at how much property taxes are, where you're buying, and how they treat the property, because some states like cap you, but most don't. Okay. Or they go off the purchase price. Like, look, Florida has a cap now if you're going to live here, but your initial taxes are off the purchase price. Okay. So that's number one, property taxes. Number two, mortgage rates. I have this conversation probably a couple times a month. I love helping people plan retirement. I'm not a retirement planner, but I love it. It's still fun. And so we talk about this stuff, and I've had clients where they're like, yeah, you know, Jen, my mortgage is like $700K. The house is worth 1.2. I just want to sell it and buy something that's like $400,000, you know, have a lower mortgage, have a lower payment. Here's the problem. So I actually did this on if someone has, let's say, a $600,000 loan at a 3% interest rate, because that's the thing. Anyone that owned a house in 21, 22, 20, like they refied. Most did. You know, there's a couple people who didn't, like Bob, Sally, you know, you were holding out for 0%, but most people refied. So a $600,000 loan at 3% is $2,529, okay? A $300,000 loan at 6.5%, so half the loan amount, guys, you'd be like, oh gosh, it's gotta be like half the price, right? No, it's $1,896. So they're going from a much higher mortgage, they're going from a more expensive house to a lower mortgage, a lower expensive house, and in this situation, they're only saving $633. But that is a big price jump when it comes to house and mortgage, right? So you're seeing people where we start doing the math and downsizing actually doesn't save them as much as they think. So they're like, well, wait a second, I'm in a 4-bedroom house right now. I don't really need 4 bedrooms, but in order to actually get my payment down, because of where prices are, because of where mortgage rates are, I'm gonna have to go into a 2-bedroom, but I need a 3. I'm just gonna stay here and see what happens. That is what we're seeing. So it's not like the boomers are out to get everyone. They're trying to figure out how to lower their numbers as well, but they might already be in a really good situation. And that's the thing. When you retire, you want your bills to be as low as possible. Period. So if you're looking at retiring, really look into the property taxes. Make sure before you list your house, someone's doing the math on what a new mortgage would be if you're going to have one. Like, work through the numbers. Here's the other thing. For the people who don't want to leave their house, right? There's certain states that I was really worried about in the last few years. Texas and Florida are 2 of them. And it's just because we saw, you know, property taxes go up, we saw insurance go up dramatically. And I was thinking, you know, Florida especially, we have so many retirees in the state, and a lot of them have their mortgages paid off, but now like the homeowner's insurance, the HOA dues if they're in the condo, you know, the taxes, all of it can be so much that they can't afford their home anymore, even though they don't have a mortgage. So we've seen an increase of reverse mortgages in the industry. And it's one of those things, I should have pulled the numbers. Someone showed me the numbers recently and they're like, Jen, this is what that landscape is like. And I was like, oh my goodness. You're gonna see more and more people doing reverse mortgages rather than downsizing, because downsizing won't be an option, because the basic costs of taxes, insurance, HOA in that area, unless they move areas, is always going to be at a certain level. So a reverse mortgage, if someone doesn't have a mortgage, it basically is a way for seniors to take the equity and live off of it for as long as they live. As long as they're living in that house, as long as they're alive, the reverse mortgage, depending on how they set it up, you know, sometimes they get a lump sum, sometimes they get a monthly, will take care of them, okay? There's a lot to reverse mortgages. I'm not gonna go into it in this video, but the bottom line is, look, the typical real estate cycle of first-time home buyer, move up, downsize, it's broken. 2019, it started in 2019. 2020 through 2022 broke it. The rapid appreciation across the country, you know, the super low rates, it made it so that what traditionally had always made sense doesn't. Also, you have the rise of the reverse mortgage right now. You know, they changed the rules around it. So what was once a predatory program is not predatory. Make sure you're talking to someone that's actually going to explain it to you. But so look, that's what we need to fix for right now. That's one of the areas we need to fix in housing right now, because counting on that generation to downsize, unless something dramatic changes, I don't think we're going to see a lot of movement there. So what do you guys think? What do you see? I know it's a different video than my normal, but look, if part of the housing cycle is broken and it doesn't look like there's any fix coming soon, I think it's something we all need to start talking about. And if your parents or if you're thinking of retiring, please make sure you're doing the math, because staying in place may be a better financial option. Anyways, questions, comments, as always, reach out, 786-933-2077. Thanks for watching.